Welcome traders and welcome to all of my students to today's mentoring session. Today is 23rd July 9:32 p.m. and currently we are looking at the Nifty spot chart. And as always, first I'll be doing the weekly sectoral analysis, which will be starting from Nifty, Bank, Nifty, private banks, PSU banks, and all the way till mid-cap index. And once this is done, then I will start taking all of your questions one by one for the positional and the swing trading setups. So without any delay, let's jump onto the monthly time frame charts. So what we can see in the monthly time frame charts is very clear. Nifty is in an uptrend, and currently we cannot see any sort of negative divergences in the RSI. Yes, this was a sort of strong resistance for the market, but as far as monthly time frame is concerned, price has been able to surpass it. Last candle was a spinning top. Today is 23rd July, so we have still not come to a month end, but we'll come to know by probably next week or so what is this candle, because as of now, even this is a spinning top, which means undecision in monthly time frame. In weekly time frame charts, last week in our mentoring session, I had clearly mentioned that the price is making a higher high in Nifty spot and RSI is making a lower high. Now this is a sign of negative divergence. This was a clear sign that momentum is slowing down. All right, the trend is still up. You can see the prices are above the moving averages, but the trend momentum, the power of the price to go higher was getting weaker and weaker, and that's what we saw, that the price consolidated, and this was a very surprise gap down, to be very frank, because on this day it looked very confident that the prices will be able to inch higher, but this was not expected, and this came with a lot of surprise. But nevertheless, prices have been able to rebound. But currently, if you see the RSI also, it is just zigzag in terms of its nature. It's not a sort of basing pattern and then it starts rising. It's nothing like that. So according to me, yes, trend is up, but in the daily time frame, it is still sideways. Prices will need to sustain above, you can say 15,900, 15,920, and after sustaining also, it should not happen that it gives a wonderful close and suddenly the next day it gaps down. That will not work out. So once we have a good close with a good candlestick pattern, with good readings on RSI, on all other technical tools, we'll also need that the price should continue trading higher and higher. That is very important. We saw here prices was going higher very efficiently. So this is what is required over here. It cannot happen that it gives a breakout and suddenly comes down. No. Once it closes higher, then the prices have to continue, and that we'll be able to understand only with time. So trade very less in stocks. You'll have to go only for high probability trades. That's what I'm trying to tell you. If you look at the monthly time frame chart, nothing wrong in it as of now. Even if you check the Fibonacci, prices are pretty far away from the resistance, which is at 37,050. So as of now, there is no issues, there is no problem even in the RSI. But if you look closely in the weekly time frame chart, you will be able to spot the resistance due to which the bank Nifty spot is not able to inch higher. You can see this particular level. This is somewhere around 36,100, and even these two inverted hammers, the shooting star, these two tops of the candles are providing resistance. So 36,500, 36,100, this is a resistance band. Until and unless price is not able to close above this, it will not be very easy for banking index to inch higher. And if you see properly, it's struggling to go higher. Luckily, this is a good candle. This has came on the back of a bounce back which occurred at this particular support. But yes, this is not a very good sign that the market has bottomed out or something. You will need the markets to close at least above 35,800 levels. Once it starts sustaining above it, and again, as I said, same thing in Nifty, it has to inch higher. It cannot just give a good close and suddenly the next day it gaps down or it goes sideways. That should not happen. So that only time will tell. If you look at the private banks chart, I think almost everything is same. Nothing is different. Only thing is that the resistance level is far away. This is the first resistance level, which is at 18,610, and this is the larger resistance level, which is at 19,300 and probably somewhere around 19,500. But yes, prices will have to surpass this level. Prices were already trading above this if you see last week, but suddenly you know that there was a gap down and prices collapsed literally. So let's see what happens. Prices will have to sustain at least above 18,700 for some sort of confidence in the traders. Only then we'll be able to see some sort of encouraging move coming up in the index. Now, PSU Bank index is looking slightly different this time. First, I'll go to the higher time frame chart. In the higher time frame chart, if you look properly, I'll just remove this Fibonacci. If you look closely, then we are still trading near this candlestick cluster, this particular horizontal resistance, and still this particular entire price band is providing resistance to the PSU banking index in the monthly time frame. It has not gone away. All right, it's still there. Also, if you check the weekly time frame, you can see this higher high and you can see this lower high. All right, and then after this particular lower high in the RSI, you saw prices retracing a little bit. But what has happened this week, it's not a lot of encouraging sign. It's not a lot, but at least something. You can see this small hammer sort of candle. It's not a very powerful candle. This is some powerful candle, you can say, but at least I can say one thing, some sort of support is coming up near this level of 24.25. So we need to watch this. And in the weekly, in the daily time frame chart, the price will need to close somewhere around here, 25.50 or something. Once prices start trading above 25.50, then possibly some sort of hope is expected from the PSU banking chart. But do not forget one thing, when prices will rise, okay, we have a bullish candlestick pattern over here. We have this bullish harami, then we have a small hammer. All this is fine. But do not forget, as the prices will inch higher in the daily time frame chart, when the daily time frame chart will start looking attractive, price will also be near the horizontal resistance in the monthly time frame. So do not forget this. Trade very, very cautiously. Metal index, if you see, I have no change in my stance. It continues to be in a strong uptrend, but it is extremely, extremely overstretched. I would not be interested to initiate any new positional trades in this sector. I repeat my words. I will not be interested to initiate any sort of new positional trades with a time frame of 1 to 3 months or 1 to 6 months. But yes, if you're holding a older positional trade and you're just trailing your stop losses and holding them, then it is absolutely fine. Now this is the weekly time frame. You can see very, very clearly we had this higher high in the price, we had this lower high in the RSI, and since then prices have been consolidating, and this is a downtrending channel, which we saw a breakout happen over here, and then suddenly last week, Monday and Tuesday, there was some sort of gap down. So prices came down, it violated the channel in the daily time frame chart, but I guess in the weekly time frame it's still intact. You can see the price went down but closed above the channel. So again, it is in an uptrend. Be very, very careful. Do not be careless in this sector. It's looking fine, but look to initiate only high probable swing trades. Get into the stock as fast as possible and get out of the stock as fast as possible. I'm not interested in any sort of positional trades over here. Now, auto sector was one of the extremely powerful sectors, but unfortunately, this particular stock has came down. Today, I think I was discussing Maruti with one of our students in the Telegram group, and we saw that since all the other stocks were also weak, this particular stock tried to inch higher, but at the closing, it came down. So always remember, if the entire sector is negative, and all other stocks are negative, and if one single stock is outperforming, I would always try to stay away from the stock. So as always, I will jump into the monthly time frame. In the monthly time frame, I don't see any issues, and only thing is that we were at a resistance. We have not been able to surpass this, but apart from that, as of now, nothing negative I can see. In the weekly time frame, yes, again we have been retracing, and one thing is for sure, now we are in a flattish sort of trend in the weekly time frame. We are not in an uptrend, we are not in a downtrend. I think we are in a flat trend where trading should be very, very, very minimalistic in this particular sector. According to me, if you see properly, I'll just remove this Fibonacci for you, and I'll apply a extension over here. According to my analysis, 10,100, this level, from this level onwards, I have noted one level over here from 10,100 to 9950. This entire band will provide a very strong resistance. 10,100 and somewhere around 9,500, somewhere around over here, 9,900, I'm sorry, between this entire band, 10,100 and 9,900. The reason is, you can see this is almost near the 1.272 Fibonacci extension. This is the 161.80% Fibonacci extension, and apart from this, this is also a very big retracement. So when all the numbers are coming together near 9,900, 10,100, these support levels are extremely, extremely strong when we are talking about medium term. When the prices hit this level, you will have to start looking at the sector. I'm not telling you to buy, but just have a look at it and then possibly look at your systems. If there is any high probable trades, you can go for it or else avoid. Finance sector. Finance sector, you can see it is in an uptrend, but we are at a resistance, so be careful. And we have been facing this resistance of lately since at least 6 months. So this is something serious. You have to be very, very careful while trading this particular while trading the stocks in this particular sector, because you can see consistently sideways movement, and in a sideways market, all of us know it's not very, very easy to make money. Once again, I think prices will need to consolidate. It will need to surpass this entire gap, close above this gap, then possibly we'll start seeing are things changing or not. ID sector. ID sector, again, no change in my stance, continues to be highly overstretched. You can see now the RSI is, in the weekly chart, is almost near 85. So this is a clear-cut sign of overbought and overstretched. When we see the weekly time frame, I don't see anything different. RSI is almost at the same level. So nothing wrong. All right, nothing wrong in it. Only thing is, just be careful about short-term, just a short-term dip in the daily chart, just maybe of 1 or 2 days. That is possible. It may or it may not come. That is possible. One stock which I like currently from the view of a swing trader, not a positional trade, but only a swing trade. Just keep a look at this particular stock, TCS, and check it in your trading setup. If you have any trade, you can go for it. All right. Pharma. Pharma, again, extremely strong in the monthly time frame. Prices, I think, not very, very near to the resistance, so no danger from that. But if you check the weekly time frame, my friends, we have a triple negative divergence. What is a triple negative divergence? Triple negative divergence means 3 times prices has made higher high. You can see over here, I'll just mark this for you. Price has made 3 times higher high. RSI has made lower high over here. So this is a clear sign that the momentum, the upside momentum is getting tired. Possibly the rally will slow down a little bit. There could be some sort of consolidation. It is possible. So be slightly careful in upcoming days for this particular sector. If you look at the daily chart, actually, if you look properly, you can see the slant over here was not vertical, it was slanting, but it was going up in a different degree. And over here, it is slowing down. So it has already started slowing down. All of the candles over here in the recent last 1 month or so, they're all small. So this is a very clear sign that the pharma sector is now slowing down. All right. Try to stay away in options in the pharma pack. That is for sure. FMCG pack continues to be bullish. I don't see any sort of issues in the FMCG pack. It is a slow moving sector, and you saw Hindustan Unilever came down possibly of some bad results or something or whatever. But with time, I think this sector will recover, and slowly and steadily prices will start moving higher. Mid cap, if you remember in the last week, last week, somewhere over here when the prices were here, I had clearly told all of you that start looking for swing trades. And when prices were somewhere over here last week, I told all of you start booking profits in the swing trades. At least minimum book 50% profits. The rest you can start trailing your stop losses. This is what I had told, and you can see just 2 days later, you can see a 1 day sell-off in this particular index. So I hope this entire weekly sectoral analysis has helped you. Now we will start in taking up the questions for the positional and the swing trading setup.